Hi there, guys. This is GMM. I have decided to take a bit of a plunge and start to talk with traders that I know both physically and digitally. And this guy here, Don, DCP Cooks, is someone that I've watched and been quite interested and monitoring closely, I guess, on the digital sphere. I've managed to get hold of him to have a bit of a chat, talk markets, talk trading, just the usual stuff. So, yeah, we'll see how this goes, and if this is good, hopefully there'll be a part two and three and so forth. So yeah, listen in and see what you think, and we'll go from there. Hey, Donny.
How are you, mate?
Yeah, I'm good. How are you?
I'm fantastic.
So
The world,
markets.
the world, the world is burning, but I am fantastic.
Yeah, you're on the right side of it.
Oh,
That's it. So yeah, I guess let's just jump straight in. What are you thinking in markets at the moment? I mean, we've obviously had this whole catastrophe, so to speak, kick off with
oh.
energy, and we've got the war in the background, and there's a lot of ambiguity to is it inflationary? Is it not? Is it going to stick around? Is it demand destruction? And the market just kept selling off, adding hikes, selling off, and now we're at this what appears to be last end of last week a bit of an inflection point. And I noticed that on your feed, your Twitter feed, that you really started to get a bit more vocal about the bounce, and that's what's kind of played out in the last sort of 48, 72 hours, so to speak. What's your thinking on markets here?
I mean, it actually goes back to a year ago this year when the market in general was willing to give lower yields. And then Fed brought in it, or Trump brought in his tariffs.
Yep.
And we got Liberation Day. And I was actually max long into that Sunday a year ago, and I trade standard units. I trade 100 lots
Yep.
in SOFR, whether it's outright or spread. My max position's 400, which is a DVO one of 10,000,
10K. Yep.
and and then I trade ZB in 30-second increments up to 128,
Mm-hmm.
just because of the express vol. I don't like anything more than about 4K max DVO one on that.
Yep.
Um, so a year ago, around this time, I was max long when Trump announced he was going to do tariffs.
Yeah.
And
Right.
I was like, oh, okay, I'm out and I'm going to reverse short. And I was able to reverse short on the Sunday night and the Monday morning after. And I captured the long and I captured the short. And then, we were trying to find a balance in between, right? Like, what's a real interest rate curve look like here? And we've been trading that curve on and off with optimism and pessimism for a year. And there have been two minor opportunities to get long and then to have to fade because Trump talks.
Yep.
And the last one was right before the war. At the start of the year, yields were oversold, cuts looked like they were going to get priced in. So I started accumulating a long position in ZB and SOFR. I prefer either M7, which is the June 27 contract, or the D's 28 contract,
Mm-hmm.
just because they give me a little timeline. And I grew up trading in the Eurodollar pit, which is the equivalent of the new SOFR pit. And so that third, fourth, fifth month window of future rate moves is really where I'm most comfortable.
Yeah. Cool.
Um, so I accumulated a position long, and I was literally long and went to bed early on the Friday night they started the war.
Oh wow.
And I'm like, oh shit, I'm screwed. I don't even know if I'm going to be able to get out. And we opened up Sunday at the highs, and I was able to get out of everything and get a little bit of a short trade. And I held that short trade all the way into a couple of weeks ago, and I covered it And then I went long again. I was like, all right, this is going to blow up. The Fed's going to have to cut, and we'll see what happens. And so I was long both the ZB and I was short. Well, no, I was long the ZB, and I exited that position on last Friday morning.
Yep.
And and oh no, I'm sorry, I was short ZB
Yeah, yeah.
and
Yep.
exited that position last Friday morning and went long.
Yep.
But I also realized that there was some construction or some real interesting conversations around the SOFR curve
Yep.
about the timeline of cuts and would we get a hike
Mm.
was the real question. And I'm friends with Matt Pax and the guys Delhi at the Ninja Group, and they had me on Wednesday,
Yeah, I did see
and
that.
they asked me if I thought I could see a situation where the Fed was going to lead with a hike, and it really caught me off guard. I mean, I'm pretty comfortable understanding the curve metrics.
Yep.
If I'm wrong, I get stopped out, but I was like, I really couldn't answer the question. I couldn't come up with a reasonable explanation for why the Fed was going to hike into an oil supply shock.
Mm.
And it didn't fit the 1990s narrative. And mind you, I started trading in the pit for my own account in 87, the T-bills
Yeah, right.
and the TED spread. And then I went back and I blew up my account. I didn't know what I was doing. I blew up my account and I went back into the pit 3 years later in 1990, walking right into, um, the new Gulf War,
Yeah.
right? And so I was trading that recessionary, that hike into the recessionary, into the failed hike, into the we hiked too early, we cut too early, the entire 90s dynamic that everyone's talking about now. That's exactly what I grew up trading. And I grew up trading Eurodollars, which is the equivalent of trading SOFR today with just a slightly different settlement procedure
Yep.
and getting rid of the Brits. We got to
Mm.
get them out of the mix. But
Yeah.
um, so what do I think going forward? Well, so at any event, I sold the June 6, 7 SOFR, which had finally gone positive.
Yeah. Yep.
And when I looked at it on Wednesday, it was trading like -8, -7, something like that.
Yep.
And I was like, this is going to pop positive, and I'd like to get shorted at 10. And it
Yep.
didn't give me 10, but it gave me five. It gave me
Five
positive
halves.
5.5,
Yeah, that's right. Yep.
and I took it. And then I was like, well, ZB's oversold. If I'm going to take this position, let's take this position. I've already got somewhat of a hedge
Yeah.
and on the SOFR side. So I jumped in and bought some ZB as well.
Yep.
And it worked. It worked on Friday.
Yeah, it did. Yeah.
It worked on Sunday night.
Yep.
It printed really well this morning.
Yep.
Um, and I took some profits. So I'm very, very, very grateful that I woke up at 3 in the morning because I got a bad gallbladder and my phone lit up and blocked me up and I had to take a piss. Um, which is literally the truth.
Yeah, that's good. That's
Um,
great.
right? I
Yeah.
mean, I'm 62, so stuff starts not working as well. All right, so what do I think going forward?
Yeah.
I think that's probably the gut of your question. Um,
Yeah, and I do appreciate that. As a trader, and you're a pure trader, right? So
yeah,
this answer that you might be about to give might be valid for the now. This doesn't necessarily be something that will hold up the test of time because you're thinking on your feet, taking things at face value, and being led there by price and by your own I guess research and methodologies. So do understand that. But yeah, I'm interested to know, what do you think right now where we are? I think the curve's basically flat. There's little to no hikes, little to no cuts, and then we get some cuts being priced in as we go into the reds. Um, yeah, I'd be interested to get your take on where you think that the shape of the curve may sit, the timing.
Well, I didn't cover my short from the start of the war until last Monday,
Yeah,
a week ago Monday. And, the new overwhelming news was going to be inflationary. And then, last Monday, I was like, all right, it's overextended. And I think if anyone that's trading the curve, they need to recognize when the market gets overextended, that's when you want to take a contra.
yeah,
You want to run it as long as you can, but when the market gets overextended, in SOFR, it gets overextended by about 12 and a half bips, maybe 20 bips.
yep,
I mean, we've seen overextensions by two cuts, right? I
yep,
mean, that's what we saw that led to the bloodbath
yeah,
in Sonia, right?
yep,
I'm max long and I'm expecting two cuts, and we get a war, and then you get that violent correction
yep,
that destroyed so many prop books.
mm,
The It kind of settled out, and I think we've got some wounded people here, right? We've got some prop desks that need to really kind of like recollect themselves.
yep.
I mean, I've heard stories of really ugly up 200 million down 120 million dollar prop desks at some
Wow.
major firms. And it's right now we don't know the duration of oil,
Yep.
and everything that's going to happen going forward is going to be related to oil. So we're all just crude traders now.
Yeah, yeah, that's right.
Whether we want to be or not, we're crude traders. And we're also Trump traders, and we're also the, the first general of the Iranian parliament day traders, scalper traders now, right?
Yeah, yeah.
So, which is just ridiculous, but that's where we are.
Yep.
Um, so how does that play? Um, there's a timeline discrepancy that people are not going to be able to process going forward. We are going to get old jobs data, and we're going to get lagging inflation data,
Yep.
right? So we've got two sets of lagging indicators. And for now, Jay Powell said cuts are not off the table. We're going to look through inflation,
Yep.
which tells me the jobs data is going to lead the market going forward. Um, I don't believe that's payroll per se.
Yep.
I believe that the real focus is on the actual unemployment rate.
Yeah,
And
there's an.
that's really
Yeah.
distorted, right?
Yep.
And that's really distorted now because we've got immigration issues in the United States, and
Yep.
we've got employment hiring issues that go back to COVID,
Mm-hmm.
where people don't want to let go of staff. So that's going to be the front driver, in my opinion, of how the curve and most importantly the 2 year and somewhere around that responds to that data set that's coming forward. And we're going to get 2 months of that data in 40 days, right?
Yeah.
I mean, we're getting the jobs number this weekend or this Friday. We'll get another one in 30 days. And so we're going to get two sets of jobs data. And then we're going to get two sets of inflation data, but the inflation data is going to be lagging. So everyone's going to be speculating on the drag on oil.
Yeah, of
And
course.
so I don't think the inflation data is going to be negative per se in the context of what really is going on because there's such a lag there. So if we get a soft jobs number, they're going to price in a cut. If we get a strong jobs number, we're gonna see things kind of stabilize here.
Yeah, yeah,
Um, and then we'll get the inflation data. But the really important part, the really important part is the flow of oil
mm,
and the timeline that it takes to get things back online, assuming we get resolution. Um, and I think that's a lot longer than people think. I think people are being really misguided on assuming this is going to be resolved before the end of the year.
yeah,
You know what I mean? It's like, okay, so we've got 600 billion barrels of oil that are coming offline in the next 60 days. So prices are going to spike globally.
yep,
That's not going to feed through to CPI and PPI for 90 days,
yeah,
right? So we're going to get really ugly inflation prints in the summer, and we're going to get higher prices on other stuff. The food stuff, the fertilizer stuff, the plastic stuff, the supply stuff. That's a 12 to 18-month supply chain disruption.
yep,
So, we're going to get really weird data that doesn't support an immediate response to it.
yep,
Um, so my hunch is we're getting worse. They're going to be defensive. By defensive, I mean they're going to lean to cuts. They're not going to lean to hikes. We normally trade an overextension in SOFR on projected rate cuts of 10, 12 bips
yep,
in a spread, maybe five. Now we're going to probably see that blow out to 2025
hmm
bips.
hmm
And so we're going to see wider ranges with some guys that have been handicapped and kneecapped
yep.
and can't put on size. So we could see some weird opportunities along the curve over the next 12 to 18 months where the market just overextends by 12 bips.
Yeah,
And you can capture that.
at the extremes, yeah.
Um yeah, right? I mean I, that's what I trade. I trade extreme to extreme.
Yep,
I'm like, okay, you know what? Momentum's oversold. Um you're at a two standard deviation. The data doesn't fit. I'm going to take a big position.
yep,
And then I either go, I usually just scale in
hmm
and make sure my position works. So I'd buy 100 SOFR, then I'll buy another 100 SOFR, then I'll buy another 100 SOFR, then I'll sell 100 SOFR, adjust my stops, and then buy another 100 SOFR.
do you at that,
Um,
okay, so at that point, do you have like a stop or a level that goes, okay, this is now going to go three or three and a half standard deviations? Like you got it wrong. Do you have a do you have a way of managing that to save you from adding and adding and adding and then seeing it go to that stress point and kicking you out or causing you to unwind? Like, do you have like
the
a fix? 'Cause I know you said you use like a 10K DVO1 once you're at max size, 400 lots. Are you like working off a notional stop? Like once I'm 100K out of the water, out of underwater, I'm actually questioning whether the timing's right, etc., etc.
I usually stick with around 7.5 bips
Okay, yeah,
on
cool.
SOFR, and I stick with 16 bips on ZB.
Yeah, nice.
Um, I don't like to lose money,
Yeah, you and me
right?
both.
And but here's what's really interesting. I mean, I'm 62 now. I've been doing this for 39 years.
Yep.
I don't have to make money.
Yeah. Okay.
So, I think that drives a sentiment shift that most new traders can't understand
For sure.
because I don't have to make money
Yep.
tomorrow
Yep.
to pay my bills next week. Um, and I'm not ultra uber wealthy. Um, I'm comfortable.
hmm
My kids are good. Life is great. I downsized 6 years ago.
Nice.
So, I mean, it's like my monthly expenses would piss most young kids off. Um, it's like I've I have done what the old school guys on the floor told me I should do,
Yeah.
which was not live beyond your means, have some money, rainy day money, be able to make it through a downdraft, and be in a position where you can, just live a normal
Yeah.
life
Yeah.
while you do crazy things. But I mean, for me, it's not crazy anymore. I've been doing it for so long
Yeah. It's your
that
norm.
it's my norm. But to the new guy coming in, I want to quit my $70,000 job and I want to start trading.
Yeah.
And and I don't even know the tax implications of trading ETFs versus trading futures contracts.
Yeah.
But I can't trade a futures contract because I don't have enough cash. It's a whole different ball game. You know what I mean? It's like,
Yeah.
so I'm the old guy in the room,
Hmm.
and I've made my mistakes. I've gotten destroyed. I've had $1 million losers a couple of times.
Yeah. Wow.
I mean, it's like I make mistakes, but I only risk, what's the max I'd risk? 10% is
Yeah.
probably the max I'd risk on anything.
Yep.
And sometimes it gets away from you and you can't control it.
Yep. For sure.
Sometimes you get convicted and you think you're right and you get destroyed.
Yeah. Of
I mean,
course.
that was my worst day ever in 1994.
Yeah. Wow.
I said buy them all, and the market dropped 10 points, and I lost $1 million in 10 seconds in the Eurodollar pit. And
Oh,
then,
ouch.
what I mean? It's like that happens.
Yeah. Yeah.
And it's a humbler. It's a
Without a
humbling
doubt.
moment. And some of the best traders I know, Pax 777,
Yeah. Yeah.
who's a Nasdaq monster. I mean, we clerked together back in the day.
Oh, cool.
Um, he drove Uber for a year after the first options blew up, when all his money got tied up in court and he had no income.
Wow.
Literally, I'm the largest Nasdaq trader in the world, local,
Mm.
independent, and now I'm driving Uber for 6 months to pay the bills.
Wow.
So we've all been through some of that, and I would recommend that nobody ever go there.
Yeah.
That's not a thing. But we all have to learn our lessons in different ways.
Yep.
And
Yeah, without a doubt. So if we go back to that example, so you build into position, you've got your stops and you know how to manage it and all that. What about you said that you would take some off? So do you job around the position? You're happy to get portions off, portions back on, portions off, portions back on over the prevailing trend that you
yes,
hope to capture. Yeah, okay, perfect. So you're
yes,
essentially extracting alpha along the way.
absolutely. I have a very simple rule that I've kind of come to really love.
Hmm.
Um, my goal is to define an entry point as close to being wrong as possible.
Hmm. I like that.
My next is to define a stop loss position that invalidates my thesis.
Yeah.
All right. So now I've done what I think is the most important work. I've established where I want to be long or enter. Maybe it's short. Where I've established where I want to enter, and I've established where I'm wrong.
Yep.
The next question is, what's my conviction?
Mm.
Am I coming in quarter increments, half increments, or am I full Monty?
Yeah. Yeah.
Right. So that kind of defines how I look at entry.
Yeah. Cool.
from there, from there, I have, this is a good trade price level. That's my exit. I have, this is where it could go,
Hmm.
level 2. This is where it could go, level 3.
Yep.
This is where it could go, level 4. And so if I get to level 1, right? So initially my stop loss is placed at the my thesis sucks.
Yep.
And so if I get to level one, I'm going to take between 25 and 50% off.
Yeah, shaving the position.
And then I'm going to adjust my stop to in profit on my trade, on
Yep.
my original entry. So I already locked in profit.
Yep.
It's a free trade unless there's a spiral, right?
Of
Okay, great.
course.
Yeah, the market completely blew out. I was completely wrong. The market was overreaching and I was stretching and whatever. Um, but then once I see price action over level one, I'll add a quarter of the original position or the equivalent of the original position to the trade.
Yeah.
And then I'll look to see how price action works and how the market pays as it moves to my next level two. And then I just repeat that.
Yep.
And, then there's a certain point in time when the narrative just gets exhausted,
Yeah.
and it's usually really quick. But, I think I don't trade technical analysis.
Mm-hmm.
I do trade 200 moving day averages, but I only trade a 200 bar on a 4 hour chart.
Mm-hmm.
I look at it on a daily. I look at a 50 on a daily. I keep it really, really, really simple.
Yep.
I want I want the macro thesis to support what I believe the market's actually underrepresenting or overrepresenting.
Yep.
And then I like to take that extreme flip side. I want to catch the low tick,
Mm.
but not be front run over.
Yeah, of course.
I want to catch capitulation is probably the best way to say it.
Yep.
And that's in a volatile market.
Sure.
In a quiet market, I want to I want to park my ass up against support and resistance.
Yeah. Yeah.
I want to know I want to know where the volume is, and
Yep.
it's there's a guy that is on Twitter, ACCLC,
Mm-hmm. Yep.
and he's a really good he's a really sharp guy, really good trader, and he literally just posted, I think it was a 2 year chart today,
Yep.
where it showed you the last 5 years of rate cuts being priced in,
Yep.
and there's only been like 4 times that zero cuts or hikes have been priced in,
Yeah.
and we're perfectly there right now.
Yeah. Wow.
So that tells me that all the stuff you thought over the last 6 years is back to a new starting point.
Yeah.
It's literally back to ground zero, and where do we go from here?
Yep.
And that, what's the best thing I can say? If you're going to be a trader, you got to have a memory, but you also have to forget shit.
Yeah. Yeah. That's right. Need the best of
You know what I
both.
mean? It's like it's really hard to do, but you got to be able to say, you know what? I was the idiot back then. The market was right.
Yep.
And the reality is the market's always right. Right.
Yeah.
You jump in early, you're wrong. You jump in late, you're wrong.
Mm-hmm.
Your timing is the key. And just traders need to find enough experience where they can appreciate what's happening in real time,
Yep.
even though some of the other stuff is off.
Yeah.
Even though the stuff that's happening in front of you it doesn't make sense. You're like, well, this market should be kind of doing this. I kind of like that idea. And then you got to develop a thesis and a conviction.
Without a doubt.
You've got to be, you got to be able to. I think the best commercial, not commercial. I shouldn't say commercial. That's going to be disrespectful. I think the best shorter term trading account is Shrub,
Yeah.
because he's like, it's all stupid, it's all silly. Um, we give thanks, we take profit. It's a free trade. You know what I mean?
Yeah.
That's a really solid thesis
Kiss.
in a
Keep it
nutshell.
simple, stupid, right? Like it's get in, protect yourself, get it in the black, square up, lock up, and then let it run if it runs.
Yeah, yeah. And I mean, I don't use crazy technical analysis.
Yeah, yeah.
I really don't. I don't even look at charts most of the time.
Really? Okay.
I look at I look at price levels.
Yep.
Um, I look at open interest. I look at volume. I look at volume profile. I look at standard deviations.
Yep.
But when I'm trading, I don't have a chart up.
Do you look at ladders or the way price is coming in and out
Yep.
of the market? Time and sales.
Both,
Yep.
both, both.
I guess that speaks to your experience. I can completely appreciate that. What about your sort of non price related research? Do you read a lot? Do you try and ingest you know sell side research where you can get hold of it, or news, so to speak, or are you just kind of just tapping X and you've curated your own sources, so to speak, and you just let that be that, or do you seek confirmation in,
Um,
in
I
thesis or whatever?
I seek confirmation in thesis.
Yep.
I don't overtly look at analysts' work.
Yep.
And the reason I don't do that is analysts are the juniors,
Yeah. Yeah.
right? So yes, they've found that magic thing,
Yep.
but they're not trading. They're not traders.
Not real skin in the
They're not
game.
managing.
Yeah.
They're not managing risk on a book. Um, so I mean, there's going to be a gazillion things about
Yeah.
oil in the next 6 months, right?
Yep.
And everyone's going to have a fucking thesis on it. And the reality is they're not trading a book. So, I'm much better off, and this is the power of X that's legit.
Yep.
You can follow real people that manage and trade money and risk.
Yep.
You can find a couple of substacks um, that have people that manage and trade, and you can learn from that without taking a loss, with just gaining a perspective. I'm a sentiment guy.
Yep.
So I'm big into what's the speak on the street relative to what's the momentum look like
Yep. Yep.
versus what's price action, which is what's ridiculous. Um, I mean, the guys that I follow are pretty relevant. Um, you know, Pinebrook, David's been fantastic.
Yeah, he
Judah
has.
is
Yeah.
fantastic.
Yep.
Shrub's fantastic. Um, who else is fantastic? Um, oh, the Queen, my
Yep.
Queen. Um, my real Queen. Jesus, what's her handle? I have to look it up. Hang on, give me a sec.
Yeah. Yeah. Right.
Tina,
Tina. Yeah. Yeah.
Tina, more protein bars.
Yep.
Um, I mean, you get a lot of color there, like
Yeah.
real info. Like
Actionable as
not
opposed to just
speculative.
fluff and
Yeah,
backward looking stuff.
yeah, yeah. I mean, what's that guy with the motorcycle helmet on? That's always posting doom scroll shit.
Yeah.
I
Yeah.
mean,
Yeah.
I don't need any of that.
No, that's
They're
right.
not capturing real information real
No.
time. It's not actionable. You can't trade it.
Yeah. Exactly.
So, it's you got to choose your follows right.
Yep.
You got to find people you can ask a question of, and they give you a reasonable answer.
Yeah. Exactly. And you
Um,
should that should be something you should do as a trader. You should be seeking that out and continuously curating that list and challenging it, because it's like you said,
absolutely.
if it's tangible, like Tina's information, stuff you share and others, you there's alpha. There's money to be made off the back of it with with some thinking and with some, sound execution behind it.
It's I mean, those are professionals. Those are
Yeah,
guys that are actually making money.
yeah, exactly.
I mean, it's like, they're actually in a role, in a seat. Sir of Finance is a great
Yeah, yeah,
example of that.
yeah, yeah. It's good.
There's, I mean, there's a couple of really, really, really sharp people out there
Yep.
that people should be seeking out. But, at the same time, I'm trading a market that most retail can't trade.
Yep.
So they're going to have to extrapolate it into how does that translate to tilt,
Yeah.
right?
Tilt or
And
dollars or
tilt,
something. Yeah.
right, and that doesn't necessarily work
No.
because tilt's based around a 20-year bond,
Yeah.
which is the
Different
dumbest bond in the world,
duration.
right?
Yeah,
So,
that's right.
so it's like I'm trading 18 months away, and they want to execute in tilt, and they're like, why didn't it work? And I'm like, well, because it's not the same. Um, so it's an interesting dynamic, and we are going into. I mean, if I look at the cycle, right? If I look at the cycle, I'm looking all the way back to 2020
Yep.
and COVID, right? We had a good economy, and then we got COVID.
Yeah.
And we had U.S. exceptionalism. We had good things going down. Um, COVID blew up supply chains.
Yep.
Well, we're going to get blown up supply chains now, but they're going to be for a different reason.
Yep.
And we're going to get a different response, right? So the fiscal response was Congress, and they threw money at everything.
Yeah.
So we got a 4-year rally off of that,
That's right.
right? I mean, we got PPP, we got employee retention, we got um, Inflation Reduction Act. I mean, they literally just jacked the fucking deficit
Mm,
by $7 trillion. And
exactly.
all that money has filtered through in the US and in the world, in the entire world. The US bailed out the entire world with their fiscal spend from Congress over the last 5 years.
Yep.
And we're only 5% from all-time highs.
Yeah. Yeah. Yeah.
and and interest rates are only, what are they even really actually? I'd have to look. I haven't even looked really. 4.5%,
Yeah.
5% on the 30-year.
Yep.
I mean, I could see a world where we settle into a 4 1/8 30-year and spoos rally, find a base after we get through this shock.
Yep.
Um, and it's game on.
Yeah.
We
Absolutely.
continue the process,
Yep.
and we haven't even talked about AI.
That's right. That's
We
the
haven't even, we
waiting in the
haven't,
corner, right?
we, well, right. I mean, I responded to my buddy David Cervantes thing today, tweet today.
Yep.
And, it's a situation where AI productivity is real.
Yeah.
And the biggest shock would be if it's not real, if it's just a dud,
Yep.
if it's a lag like the NASDAQ, where it takes a decade to really materialize.
Mm,
Um, and so there's a tail that you got to pay attention to.
yeah.
Um, and then the spend, right? Everything's been about the spend,
Yeah. That's
the
right.
construction spend, the infrastructure
All
spend,
of it. Yep.
the energy jag, and how's that going to play? And
Yep.
I don't think any of that's tradable for me, but it is relevant to the bigger picture
Of course.
of how's the market going to respond now going forward in a moment of trepidation and vulnerability.
Yeah.
And I think that's probably something that's going to be hard to dissect.
Yep.
It's going to take a little while.
I think you're right. Yeah. Awesome.
So now I'm going to flip it. What do you think?
Yeah. Look, I think I'm in the same sort of boat there. I think we've had this energy shock that I think, in theory, should and will be looked through. I think the demand destruction is happening and is being priced. Hence why we're seeing, SPOOs and equity indices globally sort of off their highs, and they've sort of accelerated more recently, even though we've seen bonds find a bid, so lower yields getting priced. So to me, the price action is starting to talk to demand destruction being priced, or the tails of being priced. And then there's a bit of a realization that we have, like you sort of talked to, this overextension. The markets ran off. I think it's a little bit justifiable in like your Euribor and your Sonia, simply because they have a very different function or sensitivity to energy. And we know this is an energy story at the moment. So the curves with hikes and then, sort of more fierce cuts coming after the fact makes sense. But looking at the US in isolation, a flat curve, so no cuts, no hikes initially, makes a little bit of sense. I think there's greater propensity that we're going to see cuts versus hikes because of the labour story. And that's a function, dual mandate, central bank, it is what it is. But Labor has not been on a strong footing for 18 months, at least 12 months, and it seems to be struggling more so recently. And if we just look at the last print, minus 90,000, an uptick in the unemployment rate. As you said, there's a little bit of distortion in there with the immigration complexities that are occurring and changes of situation in the US. So I think that the Labor is going to take back the story, and I think it's going to support cuts. And we've got arguably a more dovish Fed chair coming in, or we expect to come in. So I think there's kind of this situation holding the war doesn't escalate beyond, I guess, what Trump would like. I think cuts are in the future, and in the future this calendar year, I believe. I do think they're probably a little bit further back, sort of in towards the back, at least the back half of the year, maybe even the back final quarter, maybe. But certainly this second half of this year, I think there's going to be one or two cuts there. And, the market pricing has been a little bit skinny in that part. And like you, I was expressing trades in that nature and have done quite well. But what's the thing that invalidates this? Well, I guess we get a massive deterioration in the war, or we see, I don't know. I'm still trying to figure out how do we price hikes? Sorry, what's going to be the catalyst that says the Fed needs to hike? Is it going to be enough just to see a 5 handle on headline inflation? Does it need to persist for 3 prints, 4 prints? Are we going to see that? These are the questions that I don't have the answer, but I'm certainly aware of and seeking, not the answer, but I'm monitoring at least. But at this stage, you've got to play it as it lies, and I'm very much in the camp that there'll be a dovish slant to the curve as we walk forward, assuming nothing dramatically changes at this point. And then you look at some of the other peripheral economies, like the being an Australian, the Australian economy here is slowing. We've had 2 hikes already. There was almost 4 priced in the next 4 meetings to take us to 6 hikes in 6 meetings. Bananas, complete bananas. So there was the money,
and anyone that was trading that got destroyed.
Well, yeah, it was a tough one, but then it's come back, and there's been a pretty good trade there, and you've got a AAA rated 10-year piece of paper out there, so the 10-year bond, the XT, trading at 5.25 handle, 5.15%, and that was trading there, pre-war. So there was some pretty material opportunities in the Aussie market, and there have been. A lot of it's been sucked out now. But yeah, that's sort of where I'm at the moment. And then in the SPOO side, I think there's further downside to come. I think the demand destruction narrative is still unraveling a little bit. But at some point, if the yields on the shorter end and the belly start to suggest that the Fed will step in and there will be some support, I expect that the bounce could be pretty quick. Again, this is all contingent that nothing dramatic or drastic occurs out of, I guess, the military that's now getting deployed within the Middle East. Is Israel going to toe the line if and when there are deals? There's lots of possible scenarios, and I'm too stupid to know them all inside out. I'm just going to play it as it lies, and I think at this point there's still a bit of juice in the asymmetry of the trade for cuts at this stage, but that could change
My
tomorrow with a
my
headline.
oh, absolutely. My baseline thesis is PCE is going to spike through July and August,
Yeah.
and then it's going to roll over
Yep.
as demand destruction kind of takes place.
Yeah.
And I think most people are expecting that to happen
Yep.
next week.
Yeah. Okay.
And it's not going to happen next week.
No.
The worst thing, if he even gets appointed,
Yeah, that's right.
um, if he even gets appointed, and I'd like him not to get
Yeah.
appointed right now. But if he gets appointed, there's some in the camps that I agree with that think they're going to cut early,
Mm.
um, right into his term to give him a fluff cut.
Yep.
And I don't know that I agree with that,
Yeah. Look, if there
but
if there wasn't a war going on, absolutely. But
yes, absolutely.
I think the war's changed it, and the optics would be stinky if that was to occur. But it's not to say that there isn't a slant to get some sort of tactical. The only thing that will let them get that done straight away is if we get another consecutive negative print NFP and unemployment moves to 4.6 or 4.7 in due course. Then I think you might get a chance of a more tactical cut while things are a bit hot in the PPI, CPI, PCE department.
Yes, yes.
But you're right. The
The,
demand destruction is not going to happen immediately. It's happening, but it's not going to hit the real data because of that lag effect. In 2 months'
yep.
time, 1 to 2 months' time.
It's going to be really, really, really an interesting trade.
I think this could
Um,
be a fantastic year for genuine traders that have macro slants to them and day trading. I think there's a lot of opportunity across all sectors of the markets. All asset classes, all parts, up and down the curve, or up
well,
and down the risk curve. There's going to be opportunities.
well, you're actually building something for this, right?
Yeah, I'm building quite a few things. So obviously, yeah, I run like a little Substack, and I just talk my book and share my models, so to speak. And I've got a website that I host a portion of those models, um, and then I just share what I look at, and if I find it interesting, I share it. I put a little bit of a paywall on it because I put time and effort into it.
Sure,
But I'm not
absolutely.
I'm not looking to gouge or trap people into long term commitments. I just want to be like anyone that operates a shop. There's a little fee. It's not much. It covers my costs, so to speak. Bloomberg terminal and few other bits and pieces with data, and then the rest of it I make in trading. Trading's my primary income. I'm backed by a Chicago-based prop firm, um, having worked sell side and buy side for a number of years. So trading's my bread and butter, and I'm just trying to share it, cover my costs, and enjoy it. And I love the idea of trying to be first to share something and justify it both to myself as well as to a community. Like it makes me more accountable. So it's pretty almost selfish of me to run a Substack in the sense that it lets me talk my book and validate my own process. So I love it, and I'm now getting to meet people and talk with people across the industry, that aren't at the institutional desks that I've spoken to, and it's been awesome.
It's such a great transition. I'm really, really optimistic that you're going to build something great. I have no grudge whatsoever
Yeah,
that you're
yeah.
charging for your sub. I'm it. I mean, people don't even understand what a Bloomberg costs, right,
Yeah,
on
well,
the
that's
retail
it.
level. So,
Yeah, yeah.
I mean, it's just it's 3 grand a month, and you're like,
Yeah,
ah,
2,500 USD a month, 2-year commitment.
right?
And if
Yeah,
if you break the lease, you're on the hook for, I think, 75% of it at any point.
yep. You can't get out.
Yeah,
Can't get
so,
out.
so,
Bloomberg's got it wrapped up.
charging
So
50,
you're
50
you're
bucks a person per month. If they like it, great. If they don't, they don't. I share the trades, not necessarily explicitly like buy here, sell here, here's my stop. I share that sort of
oh
as it's
yeah,
happening. So I'm not a signal service, but I do
yeah.
talk
Don't
my
do
book.
that.
I do talk my book, and I show the record after the fact. So it's all time stamped and all that good stuff. So it's like a bit of an audit, I guess you could say, to validate what I do. But yeah, like on Friday, I said you want to be received rates 2 to 5 year, and you want to be getting short some sort of collection of spread. The one that I chose was Sep 26, June 27. Was able to get that
Okay.
out at what, less fours, less fives is where I started to get my position, and we're trading less, what, 11 and a half right now. And I think that
Right.
if you look at that spread in the contract that was there 3 months ago, so before it rolled, it would have been the June 26, March 27 equivalent. It
Yep.
traded negative 44. Now, it's not to
Yep.
say we're going to go to that level, but this thing could,
No, we're
this,
not. But
yeah, this
but
thing
it's
could price
legit.
50% of that. We could
It's
price a cut,
yes.
which means there's less 25s on tap if it carries. So, there's a bit of juice in it. I'm on side. I've got to essentially, like you said, give thanks. I've taken a tiny little bit off, and I'm looking to re-add if we come back a bit. But I've got to stop at break even. I've got nothing to lose to this, and all the upside to capture. So
Look at us trading the same fucking thing on a different
yeah,
calendar with
I
the same
always
sentiment.
I always get scared. It's funny when you go 1v4 or 1v5 the 12 month, because that first contract is, the way I see it, and this is maybe the way I was taught and had experience in a very benign rate, is that front month doesn't trade. So essentially, you're just outright long or short the
Yes.
far leg.
You got to go out. You got to go out at least 3 months
Exactly, to
to have
get
a
that
hedge.
spread
Yeah.
function.
You,
Yeah,
yeah. Yeah. No, you got to get to the third month euro, third
and,
month SOFR before,
and I was a
and
bit
that's
gun
where I
shy.
traded.
Yeah, yeah. Well, yeah, that's
That
exactly right.
that
Yeah,
that's where I learned, man. That's what I learned.
yeah. That's where you cut your
It
teeth.
was the fronts versus the backs, and I was the punching bag for a decade.
Yeah,
Literally, I was the local that said 5 on 500 sold, and I'm like, oh shit, and it was 1,000 at two,
yeah.
and I'm like, oh, how do I spread this?
Brutal.
And I'm like, I'm looking at my brothers on the left and the right of me, and I'm like, sell me 500, sell me 500, sell me 1,000, sell me 1,000.
Yeah,
And I did all the bad stuff, right? I averaged into it.
yeah, yeah,
You know,
yeah,
I did all the bad stuff just to get a hedge
yeah.
because I put a number on it.
Yep.
Um, so yeah, that was the fun part of the pit, right?
Yeah, I
I
can
mean, that
imagine.
was
I can imagine.
oh no, it was so amazing, dude.
Yeah,
It
I've
was
seen the
so
videos, and
amazing.
it would have been, yeah, like you said, an amazing time, amazing experience. Because it's very different now, I can imagine. But
It,
there's things that have carried over, no doubt, that the skill set that you've developed has carried.
the pain's still there. The reality's still there.
Yeah, awesome. Well, look, Don, I won't take any more of your time. Look, thanks for the chat.
My pleasure.
I will. Yeah, we'll hopefully
Ping me up
have
anytime.
to do another one. So thank you very much.
Ping me up anytime, my friend.
Perfect. Good on you.
You are you are a pro in this game.
Yeah.
I
Well,
would
thank you.
look
Thank.
forward to ever having a conversation with you about this ever again in the future.
Perfect. Good on you.
And I think we're gonna have some interesting moments
Yeah.
in the future.
Yeah. I
So
don't disagree.
cheers.
Good on you. Thank you very much, mate.